everybody, it's hwsteele. Today is March 31st, 2020. As you can see here, I have the book, The Tunnel Thru The Air up by W.D. Gann, because I'm going to use that to go towards answering a question that I'm about to ask you. And that question, it's really simple, and it's just, what are your expectations once you know what Gann was doing? So let's say you go to sleep today. You wake up tomorrow and all of a sudden you know everything that Gann knew and you're able to forecast exactly like Gann forecasted. What do you think you're going to be able to do? How good do you think you're going to be able to be? And, well, we're going to look at this book right here to try and get a bit of an inclination towards the answer to that. Obviously, I'll let you answer that, but I want you to think about what you're about to see before you actually honestly answer that with yourself. Because I think due to the legacy that Gann left and that has been used by the vendor types out there for the last 30 or 40 years, that the legacy that's out there for Gann right now isn't exactly accurate. So let's go ahead and look in this book, shall we? Okay, to start with, we know that this book was published in 1927. Gann started writing it in theory on the date of the foreword here, and he finished writing it in November, probably late October, because it was published in November of 1927. So knowing that, we know that anything in this book that is before October, November 1927, Gann actually had the information about that period of time in front of him. He was able to access it and reference it, in other words. But anything that comes after November 1927 that Gann talks about in this book is an actual forecast that Gann's making. And there's something about this that we need to look at pretty closely. And I'm going to go, let me change right here. I'm going to go to the Robert Gordon's Great Campaign in Major Motors, because it actually displays what I want to point out to you very, very well. Now, this is probably familiar to a lot of people here. This is chapter 16 right here. It starts with Robert Gordon's Great Campaign in Cotton, where we have a lot of information about dates, prices, number of bales, and so forth. And here, let's see, I can't talk for a second. Robert Gordon's Great Campaign in Cotton goes all the way to September, early October 1927. So in other words, all this information, everything that he's talking about in this campaign, the Cotton, he had that information referenceable to him. So there was nothing in this that was an actual forecast, even though it's kind of presented as Robert knew this ahead of time. In other words, he was forecasting that it would do certain things, and he behaved as described here because of his abilities to forecast based on the past. So Robert Gordon's Great Campaign in Major Motors is special because we start with knowledge that Gann had about what the market did, and then we end with an actual real forecast. So if we look at this a bit more closely, we see on Sunday, June 19th, 1927, so that's definitely before the book was published, Robert Gordon spent the day studying his charts and working out his cycles for stocks, cotton, and grain. He was short Major Motors and was watching it very closely. On this day, he made a new and great discovery of a time factor from which he figured that Major Motors would decline until about June 30th and then start an advance or move up in price, increase in price, which would last until about September 16th, 1927, when the company would be 19 years old. And at that time, the stock would reach final high, so he expected this time frame right here to be the final high, and would then go down to February to April 1929. Okay, so knowing when this book is published, Do you see how specific he was? June 30th, September 16th, even though he used the word about there, he pinpointed it literally to a day right here. And then the part that was an actual real forecast, because this book was written in 1927 and he's talking about 1929, he's no longer being specific to a day. He's actually being specific to a period of 90 days. He gave us an exact date that he expected the final high to come in on, but then he could not give us an exact date where he expected the low to be in 1929. So the real forecast right here, the part that was put in this book based on his anticipating something to happen from when he wrote this, it was very vague. It was not specific. So this is something that Gann did very well, where he wrote stuff and it appears as though it's put together in such a way that you don't realize that the reality is his actual forecasts are frequently much more vague, non-specific, because they're put with information that is extremely specific. So the real forecast here, we expect the low to be somewhere between February to April 1929. And I know there's a lot of people out there who will argue that Gann didn't want to be specific, that he could have been, but he didn't want to be because he didn't want to give something away. But I don't I don't personally agree with that. Because if you read through this entire book, everything that Gann talks about in the future, past the end of 1927 or past November of 1927, he becomes rather vague about. So those are the actual real forecasts. So if we move on with Great Campaign and Major Motors, we see that he's being vague here with the real forecasts. He talks about the dates and the prices where he bought a certain number of shares, all the way through up until the high that came on September 16th, that came on September 16th, 1927 to around 270. When the market advanced to 272, at that time he sold out his 2,200 shares at 272. Then it says on September 17th he sold 500 shares, so he was going short here, expecting the market to move down, of the new Major Motor stock at 138. And what happened here is a little bit before this point in time, Major Motors, which is actually General Motors, and that's very easy to prove. All you have to do is look at the information that Gann gives about Major Motors in the book, and you can reference it with General Motors, and it matches up perfectly. So Major Motors is, in fact, the real General Motors, but Gann needed the word major to be in there instead for a few different reasons. So anyway, he went short on the 17th, 500 shares of the new Major Motors, which was the split stock right there. It had split 2-1 at this point, and talks about it here. He placed a stop at 147, and then he talks about his 10% rule here. And then he says right here, he placed orders to sell Major Motors at 128, 118, 108, 98, because he expected the first decline to run until the latter part of December 1927. So he expected General Motors, his real forecast here, he expected the market to move down until the end of, or the second half anyway, of December 1927. And after that, he would put out shorts again on a rally. In other words, he expected a reaction back to the upside a bit, and then he would short that rally and hold and pyramid on the way down into the spring of 1929. And again, he's being vague here. So in other words, he expects the first decline to run until the latter part of December. So he's given a 2-week period of time where he's expecting this bottom to come in. And over here he gave specific dates, and that's because he knew what had happened already. This was not in the future for when Gann was writing the book, but this part is his actual real forecast of what's going to happen to General Motors, and that is in the future. So you need to look at his real forecast, which is vague, very vague, when compared to what's going on right here. So think about that for a little bit, and knowing when Gann actually published this book in November of 1927, go through the book and see how he talks about, and I'm not talking about the war that happens in the back, I'm talking about everything that you can actually verify as a genuine forecast, the price of stocks like Major Motors or the general market's behavior at certain points in time, and see how he worded that stuff and how vague he was with those actual forecasts versus all this stuff that happened before where he was very specific about dates and very specific about prices and so forth. Now I'm going to do something right here. This is General Motors, right? Well, we're going to go to, this is old newspaper clipping, or not clipping, but it's a scanned newspaper from June 30th, 1927, and I'll leave a link to this in the description of this video so you can access it also. But it's a searchable archive. They have this, they have papers that go all the way back into the 1800s, so you can search stock prices and things of that nature. So we're going to look here. This is, like I said, June 30th. That's when Gann expected the market to move down. We see the General Motors stock right here. I'll zoom in a little bit. Hopefully you'll be able to see it in the video. If not, you can just go ahead and click on the link and do the searches for these particular dates yourself. But we see the General Motors stock right here was trading at 196. That was the high for the day. The low for the day was 191.5. So the stock was definitely trading at the level Gann said it was in the Major Motors campaign. And we see the 1927 high price and low price right here, just as a reference. So if we go back to Tunnel, we see that on June 30th he started buying, and he bought at 192.5. So that actually fits with what we see. So if we go back here, we can go to September, let that load, 16th, which was a Friday, 1927, and then go to the stocks. See, we have September 16th, 1927. Then let's look for General Motors. Let's see. General Motors is right here. We see that the high for that day was 274. Okay, and the low was 265. So the market, or the price of the stock, definitely did go up, like Gann was talking about in this book. And of course it would, because he had all that information referenceable to him. Now you'll also notice, where was General Motors? Right here, that there's General Motors N. That's the new stock. You see how the price is lower than that? That's the split shares right there. And at this point, the other shares are being eliminated from the public. So eventually after this, the higher price shares would just disappear, and it would be just the lower priced split stock after that. So on the 16th, we had the new General Motors trading at 137. That was the high for the day. So if we go into, let's say, October, just the end of October, or we'll do October 16th, we'll do October 17th. That's like 1 month away. We can check on the price of the stocks again to see if it was actually moving down like Gann had forecast. And we have October 17th, 1927. So we'll look for General Motors again. And here we see General Motors. And now it's just a single split stock right here. And we see 138 right there. So it didn't move down a whole bunch. But it had, if we look here, let's see, we'll go back up here to, let's do October 3rd and just check to see if it was lower there. October 3rd, 1927. Can barely see that. Here we have General Motors again. We're at 138. So it was kind of looked like it was pretty much hovering around that price area right there. So he expected the end of December there to be a low price. So let's go ahead and look. And that was definitely a forecast for him because the book was published in November of 1927. So let's look at December 19th, 1927. We have the stock prices here, December 19th, 1927, and we're going to scroll down, see if we can find General Motors. And we have a price of 134, so the stock didn't really move down that much. Now you can go through if you want to take the time, because as you can see this is a tedious job right here, but you can actually go through and pull the quotes for General Motors for the entire period of time if you would like and see the actual movement of the stock. But General Motors didn't move down a whole lot like he was anticipating. Now what's worse is if we look at this and we see that Gann was expecting, he figured that stock should advance to around 270 by September 16th and made up his mind to watch it closely. Well, he was expecting the stock to go down for essentially the entire year of 1928 into the very beginning of 1929, and that's not actually what happened. So let's look. The stock, at this point, the stock had split. It's trading at the new prices of the split stock. So let's go to 1928 right here, and we'll just pick June, middle of the year. Wait for this to load here. There we go. And we'll look at Friday, June 1st right there. First part of June, 1928. And we'll pick the stock prices. See, Friday, June 1st, 1928. We'll look for General Motors. And we see General Motors right here. The stock was at 194, which is significantly higher than it was. Remember, this is the split stock right here. And our high and low for the year tells us that it had already been up to 210. The low for the year was 130. And if you research that, you're going to find that that happened in the very beginning of the year. So if we move to, let's say, November, (1928). November 1st is a Thursday. I'll let that load here. And then, looks like, I think this is the right page. Yeah, November 1st, 1928. We'll look at General Motors right here. And we see that it was trading at 223. And we have the high and low for the year. The low is still 130, so it never went down below that. And then the high here is 224, which is very close to where it was. So if we look toward the end of December, let's look at the beginning of December, Saturday, December 1st. And I don't think there's stock prices here, so let's look over here. December 5th, 1928. Here we go, this should be it. Monday, December 3rd, 1928. And we have General Motors is trading at 209. And it's the same high. Year high was 224.75. And the low was 130. But we also see here that there's a new General Motors. They split the stock again in 1928. About a year, a little more than a year after the first stock split that we saw. And they split it, looks like 2.5 to 1 maybe. So the point is, and that's 86. In December, the price of the split stock was 86. So let's look and to 1929. I think you guys already have figured what the actual point I want to make is. 1929. Let's look at January. Just kind of in the middle of the month here, Thursday the 17th. Maybe these are the prices. Oh, that's not very easy to look at, but it's right here, so we'll look. The new General Motors was trading at 79 right there. The old stock price was 198. So basically, this forecast that Gann made about General Motors, expecting it to go down into the beginning of 1929, was a bad forecast. So not only did Gann's how he wrote about his actual forecasts differ from this information. In other words, he became very vague when he talked about his actual forecasts in the Tunnel Through the Air. But in this particular instance, his great campaign in Major Motors, on this day he made a new and great discovery of a time factor from which he figured that Major Motors would decline until June 30th and start in advance up there when the company would be 19 years old. At that time, the stock would make its final high and then would go down to February to April 1929. That great discovery of a time factor wasn't so great, was it? The fact is that the forecast he made, apparently from this specific time factor, was bad. So you need to take that into account. So with your expectations of what you think you should be able to do, knowing what Gann knew and being able to trade, or more specifically forecast like Gann forecasted, you need to realize that his great discovery of this time factor here led him to a bad forecast. Now, let's look over here. On page 221 of the Tunnel Through the Air, he's not forecasting the market here, but he's actually making the forecast for the presidential election. And you can read through this right here where he writes about this. I'm not going to go through all of it. But basically, where is it at specifically? With the present data in hand and the events that are to follow the next presidential election, my judgment is that a Republican will not be elected. So basically, Gann's forecast for the presidential election was that either a Democrat would win or a new party would come into being that would win the election, but it would not be a Republican. So that's his actual presidential forecast right there. And we see that the 1928 elections led to a Republican being elected. So this actual forecast of W.D. Gann in the Tunnel Through the Air was, again, another one that was wrong. Okay, now keep in mind, I'm not beating up on Gann here. I'm not saying he was, that he wasn't good at anything. That's not the point I'm trying to make. The point I'm making is that his forecasting abilities were not as good as are being made out to be by people today and people in the past, and even Gann himself. I mean, he spent a lot of time talking about how well he forecasts, and he had periods of time where he made some very good forecasts, but he kind of doesn't really talk about the bad forecasts he made. But to his credit, he didn't change things like the Tunnel Through the Air in later years when the forecasts that were actually in this book or other books of his did not come out like he had anticipated they would. So let's look at one more in Tunnel, and this is in chapter 19, which is a very interesting chapter. I think I'm going to do a video on chapter 19 maybe in a few weeks because it's a doozy. That's where all the good stuff starts showing up in this book. But in chapter 19, December 1927, so this was a forecast for Gann because the book came out in November, so he probably finished writing it toward the end of October. It says stocks had been declining for several weeks. So in December 1927, he anticipated that stocks would be declining for several weeks. This month, or December, stocks declined rapidly, and Robert was heavily short. Okay, he didn't give any specifics here. He's just being rather vague that the market should move down for December 1927. He says wheat and corn advanced. The prices of them obviously moved up. Robert had been on the right side for several months. Just before Christmas, he figured that he would cover his short stocks and wait for a rally which he expected would come in January or February. And again, if we look at how Gann's presenting this here, it's vague. It's very vague. He expected the rally to come in January, February. That's 2 different months. That's a 60-day period of time. It's not an exact date like he had done previously in the book, where he had that actual information right in front of him. Okay, so a few days before Christmas, there was a big decline in the stock market. And then he talks about that. So let's look. Let's actually look, because if we go to tradingview.com, we can look at the Dow Jones Industrial Average, which is what this is, and go all the way back into the early 20s. Now, this is the daily chart right here, and we have where we have actual candles formed right here. Let me zoom in a bit. This is where the Dow Jones Industrial Average 30 was. And at this point, before this point, it was the Dow Jones Industrial Average 20, and they only had the closes for that particular period of time. But if we look, this is December 1st, 1927 to the first trading day in January 1928. So this is December 1927, and I think you can see quite clearly that the general trend of the market was up, not down. So once again, Gann made a forecast in Tunnel, was very vague about it, and was wrong about it yet again. Okay, so this is the third forecast that we've looked at that was an actual genuine forecast, not the war in the back of the book, because you can make the war look however you need it to look. I mean, he was definitely correct about the fact that the market went down in a big way, but the specific battles and things, they're not always given at exact periods of time and all that. So you can make it fit a lot better than these actual specific forecasts he made. So, and he also expected a few days before Christmas there was a big decline in the stock market, and over here that's where he was going to sell. But we see this is December 19th, 20th, 21st, 22nd, there's the 23rd, there's the 27th, so there was no big decline in the market right before Christmas. There was one day that was down on the 28th, then the market moved back up right here. And there was one day, because essentially the market bottomed at the very beginning of November 1927, then moved up all of November, and kind of moved sideways here into December, made the low point right there, and then immediately continued to go higher, and then moved sideways, peaked at the highest point right there, the very first trading day of January 1928. And then, to Gann's credit, the market did move down to a bottom on February 20th, 1928, and then it moved up. So he got that one right. So the major motors, he got wrong. The actual forecast part about that. The presidential election, he got wrong. December, he got wrong, but he did get this part right. So 1 out of 4 that we looked at, he got right. So this video is closing in on 30 minutes already, and if you're still watching, that's very impressive. It's probably boring to a lot of people, but the whole point of this video is you need to actually be willing to look at the book properly. Realize that what was a real forecast and what was just Gann having information in front of him, but presenting it as Robert Gordon, the hero of the book, making forecasts that were amazing. But then when we get to the period in time after Gann published the book, for the time frame of the book, that the forecasts become rather vague, they're not specific, and a lot of them do not work out. Okay? That's the real ability of Gann. Okay, so that's what you really need to understand and pay attention to. That doesn't mean you shouldn't research Gann, because there are periods of time where the methods that he uses will have really good results, but they're not perfect methods. And you will have periods of time where you're just wrong, just flat out wrong. and that's to be expected. That's why you have to manage your money very well. If there's a real holy grail to trading, that's what it is: proper money management. And any good trader, any real trader, regardless of the methods that they use, knows that it's money management that makes or breaks the trader. So if you want to, like I said, I'll leave the link to this newspaper archive in the description of this video. So if you want to use it, because they had commodity prices in the newspaper also, you can look up the wheat and the corn and all this other stuff. Anything that's an actual forecast in the book, look it up, see how well Gann did to help you understand what you should really be expecting your abilities to be after you master Gann's methods. Because right now, in this day and age, there's a lot of people out there telling you that you should be gosh darn near perfect. And that's just not true. It really isn't. Okay, so this is hwsteele. This video has been really long. Hopefully you got something useful out of it, and I'll talk to you guys in the next video.